All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. Today, we're going to talk about using the market to time your entry, specifically post sell off when we get indications that it's okay to go long again. So before we even get to the two live trades I'm in right now that Bulls on Wall Street members were alerted to yesterday, let's take a look at what's happened in the market. We've had this huge run here. I've only got the last few months, but if we go back all the way to 2016, we see the market has just been on a tear, going here from the low Brexit low in July, about 199, all the way up to 285. So a huge run in the market. And we've had this huge sell-off, historically huge sell-off. So that's where we've been right now. And as the market sold off, we really didn't know which way the market was going to turn. Was this just a quick move that was going to resume trend, which has happened almost every time over the last 2-3 years? Or was it going to be something more significant? So we've been really patient through this period, and it's been a little frustrating in the sense that in the last 3 weeks, we've made maybe 2 trades. All through this period here, because we really didn't have an edge. It would basically be just guessing. So we're waiting for clues in the market to tell us what we're going to do. So there were setups I actually passed on with specific stocks because I wasn't sure about the market. So basically what we said going into about a week and a half to 2 weeks ago, when the market started to test this sell-off low here, we wanted to see what was going to happen. And we looked at a few things. We looked at price action specifically to SPY. Does it bounce here? And when it does bounce, does it continue? So what we were looking at is declining 50-day moving average, which is actually very bearish. Can we get over that hump? And we actually did 2 days ago. But before that, we didn't know that was going to happen. And on top of that, we wanted to see how the other indexes were reacting. The Qs, NASDAQ, which has done very well and has actually shown relative strength to SPY. If we look at the fact that it got, the moving average was declining less, and it made more of a higher low rather than a double bottom or W pattern that we were talking about with SPY. So a little relative strength there. And IWM, which has more of the mid caps and gives you a better indication of what the broader market is doing, showed a lot of relative strength. Look how high this low was compared to the February low. Very different than SPY. Now, take a look at this image. I'm going to quickly put SPY back on, and you really see the difference here, where SPY is basically testing the low, and IWM makes a higher low. These are positives. These are things we really like, and IWM is already back up close to its highs. These are things that make us say, okay, the market is getting stronger here. We can, start to feel it out and start putting on some trades. And that's the key to being a swing trader. It's not just setups. It's not just seeing a setup and taking it. You have to know the bigger picture. And we're getting indications now that the bigger picture is strong. And then finally, when SPY cracked that 50-day moving average, and when the Qs did also yesterday, that was basically our signal that, okay, we can get in now. Maybe we're not out of the woods yet. We do have, if there was one negative for the market right now, it's the volatility and the amount of negative volume there's been on the way down. And it wasn't really capitulation volume either, where we could say, okay, the selling's over. So that's the one thing that is still cause for concern, but that's not going to stop us. One thing is not going to stop us from taking some trades. So yesterday, we took 2 trades. One is TQQQ, which is the leveraged ETF for NASDAQ. So, we do our analysis on the Qs, which is the underlying. And we can see here, it broke out here over the 50-day moving average, but it doesn't move with enough volatility for us to trade the Q. So we're going to use TQQQ, which is triple leveraged. So if we look at the Qs today, up 0.42%, and then we go to TQQ, you can see TQQ is up 1.3%. So around 3 times more than the Qs are. So that's why we trade this. We can get the outsized gains and still manage our risk okay. So we entered this yesterday on the break at about 157, 158. I don't remember the exact number here, towards the end of the day, about an hour before the close. We're popping up to 160, that's fine, but our target here is the open gap at 177. So the setup here is the W pattern trend continuation. So we're basically continuing this big long trend here, and we can throw in the remount here as well. So kind of a long name. We don't have a specific a name for this, maybe trend continuation, but that's the play here. Trend continuation, we know there's a remount of the moving averages, and the market has put in this kind of W pattern. So very strong, basically just a play on the market. Then we took one stock, that's Netflix. It's not this pattern, a different pattern. This is based off Netflix's earnings breakout. So this is an earnings breakout play. And a lot of times, you guys know who followed me, we have a number of different earnings breakout setups that we trade. Most of them rely on patterns after the breakout. So you don't trade it, maybe 2 weeks to 2 months after the actual breakout. But Netflix was so strong, breaking to all-time highs. And key is, we know the market, and specifically for Netflix, the tech sector is showing strength in the Qs. So because of that, we took Netflix here on the day of the breakout. We've got about an 8 to 10 point stop here and a 20 to 30 point target. So even higher maybe on the target. So we're going to get at least 2.5 to 3 to 1 on a trade, meaning for every dollar we risk, we can potentially make $2.5 to $3 on it, and maybe even higher. Maybe we go for a play like this big trend here. Maybe we go for a play to 400. We'll see. We'll assess it as it goes. Entered this one, I think it was around 337. We're at 335 right now, right in the range here. And we'll see how this one plays out. So I've recorded this video, not after the fact. This is actually during trade. So we'll see how these play out. Even if we lose on these trades, it doesn't matter. The setups were good. And we'll see how they end up playing out. We'll manage our risk, and hopefully we get 2 really nice wins and the market starts to ramp here. So that's what we did here. We're in 2 trades. You can check out bullsonwallstreet.com, swing trade alerts for the swing service. And I'll do another one of these next week where we'll take a look at how these trades are actually playing out and look at what the market's doing going forward. And we're in earnings season, so maybe we'll go over a couple of earnings setups as well.